Well, today in news headlines, we're going to be talking about Treasury deregulations so they can try and keep this thing going for the corporations whose profits, I don't know. I'll let you decide for yourself, but hey, the market's been smoothed by the corporate profits. But of course, then there's SoftBank and WeWork and that whole mess unraveling. But I also want to talk about the trouble with China in the headline news discussion today. Coming up. I'm Lynette Zang, Chief Market Analyst here at ITM Trading, a full-service gold and silver dealer specializing in strategies so that you can survive and, dare I say it, even thrive through the crisis reset that has already begun. So today we're going to talk about, I'm going to give you commentaries on headline news. And of course, I want to start with the Treasury. This just came out on Friday. There was so much in this newspaper in the Wall Street Journal on Friday. But Treasury scales back limits on inversions. You might recall that a lot of corporations would buy a shell company in, say, Ireland because their their corporate taxes, were so much lower at 14% than the U.S. is at 36%. And corporations then kept a whole lot of money overseas so that they didn't have to pay those higher taxes. But thanks to President Trump, all of that money was then allowed to come back at 15%. Well, look, they did it in 2005 as well, and it looks like they're starting that cycle again. So now they scale back on the limits of inversions, which are rules designed to limit tax-avoiding corporate inversion deals, deeming the regulations are just too burdensome on these poor corporations that are making near record profits. Generally, it's a U.S. company with a smaller foreign company that would merge, and then even though nothing else would really change, the headquarters, the manufacturing, whatever, none of that would really change, but the tax base would change. So I'm very glad that they are repealing those rules that treated some separate transactions between parent corporation and subsidiaries as connected transactions, because good, the corporations will now again be allowed to accumulate massive amounts of cash overseas, and then there's probably going to be a deal a little bit down the road that enables them to bring that back almost tax-free, or at least at substantially reduced rates. Because remember, even though we're at 21% for the corporate tax level, that's not the individual tax level, but at 21% for the corporate tax level in Ireland, unless I'm mistaken, they're still at 14%. So it still benefits them. And it's really a good thing on those corporate profits, because listen to this headline, it's ridiculous. Resilient, and remember, of course, we've got markets making new highs, but resilient corporate profits soothe fears of a slowdown. Investors are breathing sighs of relief that corporate profits haven't waned as much as feared, giving new life to a stock market rally that has largely stalled since the summer. Although earnings are on track to decline for the third consecutive quarter, earnings are truly better than expected, said Peter Vanderlee, a portfolio manager. So these are the institutional investors that we talk about. A portfolio manager at ClearBridge Investment who oversees a large portfolio. As a result, there hasn't been a moment where you would say, look, it is upon us. A recession is nearing. But corporate profits fell this quarter about 2.7%, which is the steepest decline since 2016. It's a good thing they're so resilient. I mean, do they read these things before they publish them? Do they think about what's coming out of their mouths before they say that? For some, the latest earnings season has highlighted the strength of the U.S. economy relative to others around the world, and they always put that in. So yeah, we're the worst horse in the glue factory, but we're better than all the other horses in here, except you got to keep in mind, we're still in the glue factory. And speaking of that, I also want to bring up SoftBank because we've talked a bit about the debacle that was WeWork, even though, but the Vision Fund had become, in the span of a year, the world's most influential technology investor. And this is the thing. They did it on a whole bunch of debt, but also sovereign wealth funds, particularly from Saudi Arabia. But now a lot of their investments, because what they do, they built unicorns. Get big fast, forget about the profits, they don't matter. But what happened when Uber came out in May of this year? Well, it seems like, and we talked about this at the time, that there was a shift in sentiment where all of a sudden profits do matter. So a lot of the funds that SoftBank, or a lot of the corporations that SoftBank funded, are faltering. Not good. But hey, debt can make you look affluent for a long time, and it can cover up a lot of ills until it can't. So for those that think that these things will just keep going on and on and on, they don't. Honestly, they don't. But I want to also briefly talk a bit about China. In this, and I don't know, Megan, can they see this graph here?
Yeah.
They can? Okay. So you can see where the profits are, but they're expecting greater profits. Yeah, well, if there's a miracle, they might just see them. Can you see how the profits? Okay. Here,
Yeah.
That's good. All right. So, the rising threat of digital nationalism. Now, I'm going to be talking about some things, but we've talked about this before. For those that think that the internet, you can go around the system, as the internet turns 50, the global vision that animated it is under attack. What can be done? Because China has shown other autocratic states that the internet can be controlled. Yes, it can be. But they're coming out with an alternative, which I'm going to be talking about probably next week. But for those that think that the internet and the digital currencies and all of that go around the system, you need to know they don't. And China should have shown you that lesson. But also, what China should have shown you, you're talking about the US and China being the world's two largest economies, but there are runs at Chinese banks. Now, up until, don't hold me to this, but I know I did something on it, I'm pretty sure 2015, they had not let a bond default. But since then, even with all of this massive money printing and what they call stimulus, it's not really stimulating anything other than a corporation like SoftBank that can create all of these unicorns. But for a third consecutive day, rushing to pull money out, even as authorities stepped in forcefully to quell concerns, Henan Yuashan, I'm probably butchering that, I'm sorry, Rural Commercial Bank, there is a run at the bank. In recent months, China's banking sector has been dogged by liquidity concerns, particularly among smaller regional banks that had expanded aggressively. The fourth small lender that authorities have rushed to aid this year. Now, what if the stimulus was really stimulating, why are they having these issues? Why was there four banks that they had to save? Could it be because Chinese developers are building sandcastles in the sky? The property developers have been on a borrowing binge. Again, it goes back to debt. Taking on new debt in the short term can make you appear affluent. It can make you appear wealthy. But at some point, debts must be dealt with. You either have to pay them, you have to roll them over, or you have to default on them. And since so much of Chinese growth and U.S. growth, come on, global growth, let's face it, has been on a massive debt binge. Could it be that it's time to take care and deal with that debt in some way? And could that not be a way that means that the banks are failing? A run on the banks. So could we see that soon? Yeah, here, of course we can. We can see it all over the world. And there's more that I'm not getting to, but that'll be it for today. And make sure that you come back tomorrow, where I'm going to be talking about leverage loan and the rise of a lot of the CLOs and other things that we're seeing that are not exactly like they were leading up to 2008, but are much more dangerous. So keep in mind that financial shields are made of physical gold and silver. And until tomorrow, please be safe out there. Bye-bye.